Chams, of course, is in the tech industry. Revenue was very modest, up by 2.5%. The cost of sales outpaced it at 8.5%. We see gross profit falling 14%, and operating profit, of course, will follow suit, dropped 23%. The real kicker for Chams is that their net finance cost went up, exploded 327%, and this will drag down your profit after tax 53%. Like I said, your EPS will follow that same line of thought. EPS declined 52%. This was a very tough quarter. Margin compression and finance costs did eat harder for Chams. I would also want to point out that I'll be looking at how Chams is going to bring artificial intelligence to bed in their operation, looking at their corporate disclosures, looking out for news about them imbibing artificial intelligence to grow what they have. The next one would be in the pharmaceutical industry, which is May and Baker, one of the big players in that industry as well. They came through with solid growth. Revenue was up 35%, gross profit up 50%, operating profit, of course, will follow suit, so at 76%. Profit after tax climbed 77%. The EPS would mirror that, which is also at 77%. But our keynote here is that despite a 30% rise in admin and distribution costs, they have really managed to expand their margins despite this cost. So we can say they produce a strong and balanced performance in the midst of this. The next one would be Unilever. I'm trying to keep this under a few minutes since I have most of it on the blog already. Unilever, they posted a very healthy quarter this last quarter. We're looking at their revenue, which grew 43%. Gross profit was 31%. Operating profit surged 75%. Profit after tax, this went up 15%. Of course, like I've said severally, EPS will follow suit by 16%. What is our key takeaway from Unilever? The cost of sales rose faster than revenue at a pace of 52%, but they were able to keep their admin cost at very nearly flat at 2%. Their net finance cost also improved 66%, and this cushioned their bottom line. This is a very good quarter for them as well. I won't say fantastic, but a very good one. And the big one everybody's talking about, the oil giant Aradel. Where is Aradel? And here. Probably have not posted that. But for Aradel, on my notes, the revenue rose 43%. Gross profit was up 11%. Operating profit dipped slightly at 0.9% due to they have this spike in their admin cost, admin expenses, and this is the game changer because they, like I said, they've invested in several other companies. They had share from other associates surged for 90%. This is very big for them. Profit after tax almost doubled. That's 122%. EPS is up by 120%. Of course, all this will follow suit. So, despite this rising finance cost for Aradel because they are leveraged, they did grab a whole lot of income from their associate to deliver a very strong bottom line. So the big picture of what we're looking at, Seplat and me and Baker, they did deliver strong standout growth across board. Unilever, they did show resilience with margin control and finance gains. For me, Aradel mixed operations because they crushed it with their associate income. I would like to see more from them as individual game changers. Chams, they struggled with margin pressure and debt cost. looking forward to how they can come out of this in the next quarter. So if you're an investor, always do a deep dive, look at the cost, look at the revenue, look at what's going on in the industry, FX exposure, and look at if they have associates contributing to their bottom line. Don't forget to like, subscribe, and drop your thoughts in the comments. Which of these names are you bullish on going into fourth quarter? Again, see you on the next video. Thank you for tuning in.